Shavyfxhub. The market today will open, and we already see the sentiment on Friday. Market under sell impulse leg. That matters a lot. How the week closed, and that will tell you how the coming week will be. And when we look at that structure, the dollar index moved in the same direction with SAU USD. But towards the close of New York session, dollar found support and made a significant rejection. The question is, will it buy back as the week opens, or will it continue still on the same bearish impulse leg? Because on a monthly time frame, dollar hit a supply roof and is respecting that structure. If you go back and look at it on a monthly time frame. So let's head straight to the point. And the idea here is to see if we can find the holy grail, which is the best way to approach gold, buying and selling in zone, because the buying and selling of gold happens in zone, selling in zone, buying in zone. And we want to draw our price action from December rally. Markets started creating series of higher highs, higher low, higher high, higher low, consistently higher high, higher low, higher high, higher low, higher high, higher low, series of higher high. Keep extending, extending, higher high, higher low, higher high, higher low. On 4 hours, the market kept doing this, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This is not a high. This, what we had on Friday, it's not a higher high because it's not greater than the previous high. Our strategy is to sell at the break of the previous high. Yesterday market did not close break of the previous high. So it's showing you a sign. It could be a sign of reversal. It could be a sign of reversal. But let's not be quick to conclude. Let's give it a grace. Let's give it a grace because if you look at the current low, if you look at the current low from our structure, you will see that it's not below the previous low. So we do not have a complete invalidation of trend yet. We cannot call it complete invalidation of trend. Based on our strategy, these things have different approach, how everybody approach it. The way I analyze it might be different from the way you analyze it. But the most important thing is to see whose price action was respected at the end of the day. So now you can look at the high here. The market almost came at the same level, creating a double top structure, a clear double top structure. If that's a clear double top structure, if we have a break of the neckline or the double top structure, that could technically send price in the downward spiral. Now we have a neckline here, and the neckline of this double top structure on 4 hours, it's a little bit twisted. It's twisted in the sense that we have the body indicating as neckline and we have the wick indicating as neckline. So we the previous high was 43, 2943.7738. The market didn't approach it, but we can say it's within the zone. It happened within the zone. So let's give it a zone. Let's give it a zone and proceed from there. Please, from 38, from 38 into 43 should be a zone. It's even less than 5 points. So it has all reason to react at that level. But I will show you the holy grail with this single line and why price has reacted at that level. So when you switch back to your line chart, you see price create here the supply roof and rejected, create here another supply roof and rejected, return here, respected it, affirming it an ascending trend line ATL, came back again to confirm it again as an ascending trend line because we didn't draw this line without confirmation. After which the structure was broken, price came here, retested it one, retested two, retested three. Now this structure has been retested 3 times. First retest after break of structure, breaking from a supply roof to a demand floor one, demand floor two. Could this be a demand floor? That is the question. Now we have a double top structure. Market under bearish impulse leg. The bearish impulse leg was significant with a heavy, healthy bearish candle dropping, indicating presence of I don't want to buy again. I need my money. Give me my money. I'm selling. This is what they are saying. They are saying they are no longer interested in all this choppy buy. Look at all the buys. Can you see all the buys? They are building this liquidity, building buy liquidity for take. If they do this kind of thing, three more candles here, all this money will go. All this buy, they will take all of them away. So this thing is a little bit diabolical, and we need to understand it the way I'm saying it. They keep building choppy buy candles for 4 hours. Look at what they have done just in one single 4 hours. And this is not the first time price is doing this kind of thing. It has done something like this here before. It draw 4 hours candle. It came back, he bought it. People were rejoicing. It came back again, drew another one. It came back again, drew two red candles. So let's be mindful of bearish candles. And you see, at the point where market is now, we have a history of a strong bearish candle. At the break of this structure that creates this supply roof and subsequent supply roof and another supply roof, another one, another one, another one. This is a very strong trend line. This trend line is very strong, very strong on 4 hours. And let's look at it using dotted circles to show the strength of this zone. And the week for SAU will be very tough. I won't lie to you because of the movement of the dollar index. There is no correlation. They are all moving in the same direction. But you can see that the dollar index have found support. So let's go see if it opens and continue to buy. There is a probability that gold will drop because already we are seeing a bearish price action, a double top structure. We are seeing it already, so we can't ignore it. We can't downplay it. We must let it be what it is. When you see a double top, triple top, double bottom, triple bottom, head and shoulder, inverted head and shoulder, those things have what they mean, and they must do what they mean. So is we'll have to see the neckline is broken. The neckline is not broken yet, so it cannot be confirmed double top. Now, this is the strength of this line. The strength of this line has been outlined. This is the potency of the line. In fact, it weighs more than that. So for a very long time, it served as a roof, as a supply roof in the uptrend venture. Now you see the structure broken and it hasn't really played much on price return. The question is, will it play back before breaking the structure again? Or will it use the same bearish impulse force? Because you just look at the force, a heavy breakout, taking out all pending stop loss, regardless of who owns it. Will it continue to do the same? Now let's look at it again on 4 hours and switch to our line chart. We have a descending trend line breakout on 4 hours. After price, this is a descending trend line breakout. This is a breakout on 4 hours. Everybody was rejoicing. Oh, it will sell, it will sell. It broke out and created a new all-time high. So after that breakout, our litmus test for this descending trend line was a heady candle close, a heady candle close, breakout of structure, and lo and behold, we had this candle breakout of that structure. So thereby giving us that buy continuation uh, strategy by price breaking out of a descending trend line. It comes to retest it, and this was a retest candle. So I want to label it RT. After a break of structure, it came back to retest it. So we must be mindful of that price action and hold it and see what price we do next. So we have price establishing supply roof here, supply roof here, breakout of a supply roof by a heady 4 hours candle. Market did not retest. It continued creating until it got to a new all-time high. Return here to respect it. Now the question is, will it break out from here? It might not really break out. The new candle might come here and fake us out into 58, into 58, into 55, then return back and resume buying. This one case scenario. I see this to be possible. The reason I'm saying it is because of the long week rejection. A 4-hour candle that dipped itself into this structure tells you that there is a descending trend line breakout of 4 hours, and there is a breakout that he came for a test. He didn't come to sell, he just came to buy. Then he just need to pick liquidity. And that was why you see the 4 hours candle closed in a long leg. He rejected everything. Over 90% of the body of the candle was rejected. The candle might come again and give us exactly what we have here. Remember, trading is probability. The probability you'll be rich tomorrow is there. The probability you'll be poor also will be there. But what matters is what you are doing day to day with your life. Are you growing every day? Are you adding knowledge every day? Trading is probability. So you must look at what price have done yesterday, day before yesterday, 5 years, 10 years, 15 years ago, at a particular level, at a particular zone. There is a probability to do the same again. If you do the same thing every day, you get the same result. So that's consistency. That's consistency. So we always want to, grow ourselves in mindset rather than just looking at chart every day and without growing our mindset. So you see, this is what I see here because this area is a very strong price action, ladies and gentlemen. Can we see the structure for free? This is a free structure donated by Shavyfxhub. I would ever reach out to you for account management or for soliciting of capital or for any of that. I'm not into that kind of shit. We're only here to educate ourselves and educate the next generation for free because we know the importance of having the right knowledge to address the future. And that is why I stated that everything I do is basically free. I never charge any knowledge to share anything. Whatever I know today, I will share it for free. So please be guided, be guided, be guided, be guided. So now we have this structure, and we have this strong week in Wednesday. So we are also looking if price might dip itself into this structure because we have a closed body candle close. This is a solid body close of a candle, 4 hours candle, and we have a breakout and price came back to retest it, affirming the descending trend line. That this is a true descending trend line. Price could dip itself into 55, into 58 for a potential buy. Even if it's not a potential buy, it might just come here to retest a broken demand floor as a supply roof. It might do that. So if that is what it wants to do, so you must be guided. You must be guided if you have a breakout from there. 55 is a buy position. 55 is a buy position because look at it by virtue of using our vertical root strategy. If we place this candle by tomorrow as market open, Sydney, Sunday, hmm, now the market is opening today. We're going to have an open market today, Sunday. If market opens today, I will continue to have that bearish drop. That bearish drop will cut across on this descending trend line where we had our previous week rejection that turned to a coin, almost trying to create a new all-time high, but didn't. If that happens, then your buy position is going to be where you cut across, which is 55, 56. So that becomes a new buy zone. The idea behind here is now it to be considered that price has broken out from a demand structure, which is an ascending trend line. So if it breaks out from there, it want to go back to retest it. If it retest it, then it will pick up more sell liquidity. There are a lot of sellers who want to sell. So if it goes back to retest that structure, all of them will come as a team and break that imaginary descending trend line breakout. So if they do that, they will come back, then use that momentum and break it. But it depends who is speaking liquidity at this level. But look at what has happened here. It looks to me like an institutional rejection. It looks to me like an institutional rejection. So if at this level, the same people they have an order on this descending trend line, if it comes here, they will pick it, go back, break the structure, and continue to trade. So let's look at some parameters that must guide us properly on this ascending trend line. I want to do gauging. Gauging is when you draw a trend line, you look at what value does it hold in the market? What value does it hold in the market? What value are we talking of? SRRS value, where support becomes resistance on break of structure, and resistance becomes support on break of structure. So we are looking at it. If it happens, then where did the latest candle follow? So now we have this structure. I want to clone it and place it on the current price action to see if what we are doing is right or wrong. Ladies and gentlemen, this is a new zone. This is where the race will be completed at 3020. I said it before. It was this structure that gave me the impetus to tell you if uptrend continued without that immediate correction, gold would have been led into 3020 because a lot of people anticipated 3000 a whole number. Market might come in and place more more numbers to the previous prediction in order to take away the sell stop loss. A lot of people are predicting whole number, and if whole number go to begin to drop, market might go extra 200 pip in addition to whole number, then drop from there. So on this structure now, we want to change the color. Let's make it black. So you can see that the price action is perfect and clean. It is perfect and clean. So what does that mean to me? Now I want to make a sell zone. So my sell zone will be on this structure. So in the future, if price returns here, ladies and gentlemen, I already placed a sell zone at 320. In fact, I started from 317 in case the market didn't trigger at my designated area. I have confidence that from 318 into 321, and then with a stop loss of 10 points on a minimal risk exposure. You don't need to put yourself into a heavy lot size. That will affect your stop loss. To affect your stop loss. So always go minimal. Don't over leverage so that you can have an ample stop loss. Gold is very volatile. So when you are trading with this pair, you need to put yourself in a very big stop loss. And the only way you can do that is by staying on a minimal loss size. So if you're on a minimal lot size, it gives you opportunity to go in there with a big stop loss so that the market will always play in your zone. Gold buying is in zone. They buy and sell in zone. So this is what everybody must understand. The buying and selling of gold happens in zone. So you can see that that structure was valid. Now let us clone it again and bring it to the demand floor. We have here as a demand floor. We also see this structure is valid or not. If this structure is valid or not. If it's not valid, then we know we are doing something that is not accurate. Now you see this structure, when you switch back to your line chart, price came here, picked up here as a demand structure, return here as a demand structure, return here before break of structure, retested as a supply roof, return back, broke the structure, create a new high. Then he came back, broke the demand floor, and is trading on supply. If you switch back your line chart, look at where we are stopped here, 2,943 point whatever, 0.7738. The structure is correct. So let us maintain only three line in order to give us clear directional bias. Let us maintain just three line. In my previous chart in one broker, I had multiples of line, and a lot of traders might frown at that. So let us maintain maximum five lines so that we'll stay to this chart and look at how it unfolds today and tomorrow. We'll watch it. So now you see that structure is correct. Now let us see we have what else do we have here? We have here another demand structure where price found demand and created a new high. Ladies and gentlemen, if we move this structure, let's not print a new line and place it here because here we have a clean break of structure at this level. After price created here demand floor, price went on to create a new high, to create a high, not a new high. It's not a new all-time high, but it's going to create a high. And price came back, broke the demand structure, used it as a supply roof to continue selling to where we had 2,584. If you switch back to your chart, you will see that the price broke the structure, came retested it, and ladies and gentlemen, we came back to that level at 2,939.6 and price sold. That shows that this trend line, this trend angle is valid. That is what it means. It shows that it's valid. So now what are we expecting? Then we can move the structure again and bring it to another area where we have a strong supply roof and also a broken demand floor should send itself what as a supply roof. You switch back to your line chart. What do we have here? Ladies and gentlemen, we have here as a supply roof. After break of structure, price came back here to retest it as a supply roof. Price returned here to respect it as a supply roof. Break of a supply roof, price returns here as a demand floor. Break of a demand floor returns here as a supply roof. Before break of a supply roof returns here as a demand floor. Create a new high 2,939 dropped. So what are we seeing? That if